Hey guys, how's everyone doing? This is Nick from forexnews.com with the daily analysis. Today is Thursday the 4th of July. So happy Independence Day, America. Thursday the 4th of July, 2019. Time is 11 a.m. here in the UK. So in today's analysis, what we're going to be doing, we're going to be looking for price action setups across all these pairs. But more likely than not, I'm going to be saying that it's probably not worth trading for the rest of the week. And I'll tell you why it's not worth trading for the rest of the week, in my humble opinion. And why this week so far has been a pretty crappy week. I mean, I don't want to be a complete downer. I'm not saying it's 100% not worth trading. I'm just saying for most people who want to play it safe, it's a high risk time to trade right now, and I'll tell you why. So we're going to switch over to the calendar and I'll explain exactly why. First of all, today is Independence Day. That means US traders are off. They are on holiday right now. They are not trading. Banks are closed. Managed funds, hedge funds, probably closed, all of them, or most of them in the US. Sure, there's still going to be some bots trading, some of the automated side of things is going to be happening. But overall, I would say that the US is closed for business today. And that's obviously going to have an impact on the markets. So when the US is closed, of course, Europe is still open. Of course, the UK is still open. So there is going to be some movement, especially during the London session. And generally, that's one of the busier sessions, if not the busiest session, busier than New York. So we're still probably going to see some movement today, but it's going to taper off in the next few hours. So it's already lunchtime for most of Europe. It's 11 here in the UK. They're 1 hour ahead, so they're going off to lunch right now. So lunch for most of Europe. And the other thing to consider is tomorrow is non-farm employment change, otherwise known as non-farm payrolls. Or I should say non-farm payrolls, otherwise known as non-farm employment change. This report here, this is the biggest report, the biggest impact report in the Forex market. It has a huge impact. Well, it can have a huge impact. It depends on the month. But it can have a crazy big impact. So this is the biggest report. Generally speaking, before this report, things are pretty quiet until after that report comes out. So when that report comes out, things pick up again and they go back to normal. But every first Friday of the month, that week is going to be a slow week. That's a bit of that's a big statement I just made. It's not every single time, but it is the vast majority of the times leading up to the NFP. You do get a slower week, less volatility, less volume, whatever you want to call it. So what we've got basically is a slow week anyway. Add on top of that, US traders are off today. I just don't really see these trading conditions being safe. We're not going to get much volatility, in my opinion, which we've been seeing for 2 days straight now. Like, look at USD CHF, for example. Now, there was some movement, of course, on, let's go over to USD CAD. USD CAD did drop a fair way the last 2 days. Switching over to USD JPY. USD JPY has been doing mostly sideways. GBPUSD the last 2 days mostly sideways. So there has been some movement on pairs like CAD, but everything else has been just mostly sideways. This has been mostly sideways. This is EURJPY. So we're looking at all the majors and they're mostly just shifting sideways. We got a bit of movement up on New Zealand USD, but it quickly retraced and now it's going back to where it started. So again, sideways movement. We're not getting any big moves. We're not getting much happening overall. Things are just going back to where they were roughly, or they're staying within the range of where they were in the first 2 days of this week, for the most part. so this is a pretty common NFP week, but now we've got the added thing of the Independence Day holiday for the US. And I just figure, even though I'm sure a lot of banks and stuff are going to be open tomorrow in the US, I think the trading is going to be a bit thin in the US tomorrow, because people are just going to take this as an opportunity to have a Thursday, Friday, Saturday, Sunday holiday, aren't they? So they'll take a holiday day on that Friday. Or, call in sick, as a lot of people do, don't they? So I just think we're not going to see much volume for the rest of this week. And when NFP comes out, I'm sure we're going to see a substantial move, as we usually do. But other than that, I just don't really think we're going to see a crazy amount of movement. Now, that being said, when liquidity is low, you can get some insane moves, some insane, scary moves. I will take you back to, what's a good example of this? Perhaps USDJPY. Take you back to USDJPY Jan 3rd of this year, this move here. That was, traders were away, there weren't many people trading. Low liquidity conditions caused this insane spike down here, perpetuated by trading algos, trading bots, whatever you want to call them, plus low liquidity. So there weren't enough orders, there weren't enough buy orders. So to fill all the sells that were happening, to fill all the shorts, price had to be filled lower and lower and lower and lower, because there weren't many buy orders to soak up those sells. So price just nosedived. So that could happen, of course, but that's not something you want to be trading through, because that's something that could take out like 10% of your account in the flash of an eye. In the flash of an eye? I don't think that's a saying. I think I just made that saying up. Blink of an eye. What the hell's a flash of an eye? Yeah, so for me personally, I'm going to take this opportunity to do what a lot of Americans, I believe, are going to do, and take a 4-week weekend. A 4-day weekend. What is wrong with my brain today? A 4-week weekend. A 4-day weekend, Thursday, Friday. I'm done for trading as of this morning. Now, I do often say that, and I end up taking trades anyway, because that's just how my brain works. If I see an irresistible trade, I'm going to take it. But probably going to be taking Thursday, Friday off today. Now, that being said, I'm still going to do some analysis for those of you who are just too committed to take a day off or to take 2 days off. I'm still going to do some analysis. So let's dive in. It was a bit of a long intro, but yeah, let's dive in. So USD CAD, this one, let me place this back here roughly. Some people are still in this one. Some people probably, I'm sure some people might have got stopped out, or some people have, depending on how or where your stop was exactly. Some people might have just stayed in, and some people might have exited early. Yeah, I wish I could have another 4-week weekend. Well, I don't think I've ever had 4 weeks off in a row. But my plan next year is to buy a sailing boat. And this isn't me bragging like one of those traders on YouTube who's like, oh, I'm going to buy a yacht and sail around the Mediterranean and make $1 million a day with my trading account. I'm like completely serious about this. I'm going to buy a yacht, not like a stupid super yacht, a free cabin yacht, something sensible, and hopefully, fingers crossed that it all goes well. Starting next year, I'm going to be doing 3 months in the yacht and 9 months on land, which is the plan. So I'll be taking a 4-week weekend next year. Might be taking a 12-week weekend, but I will probably still be doing my analysis from the yacht. But yeah, that's the plan. Let's see if it comes Let's see if it comes true. We'll see how it works out. But again, please don't take this as me saying, oh, I'm super rich, I'm going to buy a yacht, because yachts really aren't. It depends what you're going for. They are not stupid expensive. They are not like, you know, unless you want some crazy yacht that sleeps like 12 people, you know, that it's not a crazy thing to say. And no, I don't have a helicopter or a Ferrari, but I do want a yacht. Anyway, so I'll take a 4-week weekend next year, and I'll probably still try to do my analysis from the yacht. We'll see how it goes. Anyway, back to the actual analysis. So I'm not sure what most of you guys have been doing with USD CAD. I know some of you are probably still in. I imagine some of you might have got stopped out, but I imagine most of you probably closed it out early when you saw this one kind of turning around and just not going well. If you're still in, I mean, at this point, it's so close to your stop loss that you may as well hold on to it, because it looks like we're seeing a push from buyers again. I would not be at all surprised to see it head back to this resistance area, and you could probably get an exit closer to your break-even point. So yeah, I mean, if you're still into this one, hold on. New Zealand JPY, I know some of you were short here. This one's just moving sideways like most pairs. Hey, Oparashi. I don't know how to say your name, man. I'm sorry. I'm going to say Opara. Catherine, Aaron, and Sydney, and Michael. Oh, sorry, Michael. I half read your message and then I forgot to follow up because I've been talking about stupid stuff like yachts. So let's get down to business. All right, I'll get to GBPAUD shortly. Okay. I'll answer your GBPAUD question, but let's just cover the open setups. So I know some people are in short here. I mean, obviously, this is not a bad trade at all. So the trade was, I think, taken on the 12-hour for a lot of you. 12 hours, something like this. You may as well hold on to it. If you're in, you may as well hold on. There's no reason not to hold on to this trade. It's moving down. It's just moving sideways because I just think everything is probably going to move sideways for the rest of the week until NFP, and then we're going to get a spike in some direction. So, you know, this is no surprise that it's got some sideways movement going. It's just, you know, I've already explained it, so I'm not going to get into it again and bore people. So we got some sideways movement on USD CHF. I know some people are in short here, moving sideways. Just hold on to it again. New Zealand USD, there was a long here, which I believe for most of you has hit target. I think that it was traded on like the 8-hour. So that one would have already hit target. Or if it didn't hit target, it hit resistance and it's pulled back. So yeah, I mean, do what you want with this one. If it hasn't hit target, it's going back to your entry. So you might want to... You close with break even. Yeah, it was a tricky trade because it went up to that resistance area. It's just been a crappy week in terms of market movement. We're just not getting that market movement. But if you took on the 12-hour, I completely see. Also, just complete transparency here. I didn't have this resistance area here at the start of the week. I had it higher. I since adjusted it. I adjusted it later in the week to this bounce here, which then it bounced from again. One of my mentoring students pointed out to me that I had my area too high. He said, I've placed my area down here. And I was like, you know what? You are 100% right. And you should probably be teaching me how to place support resistance areas, not me be teaching you. Because I had mine up here, but it's definitely better placed down here. I hadn't really updated my New Zealand USD ones. But regardless, even if it was placed up here, you would definitely have considered this a point where price could stall out, and you would have had some kind of minor support resistance there, or a small target there, or something like that, something in preparation, because that's just how you have to handle these spikes. When price goes like that, you know that the second attempt it's going to struggle at that same spot, and that's what it did. So even if you didn't have a full-fledged resistance area there, that's something you watch out for. All right, cool. I'll go with Uchi. Yush. Oh man. Am I saying it right? Ush. Right. So while I get confirmation on that, hey Andre, let's take a look at some of the ones that are some of the potentials from earlier in the week. So AUDCHF is at resistance and it's stalling. On the 12-hour, on the daily, it's stalling. Now you could probably enter a short here on the 12-hour, but what I would say would be to definitely don't enter on a break of that low. That's going to be a bit of an early entry because it's pretty high up in the resistance area. I'd probably handle it something like this. Oh. I'd want to see a move a bit lower than that. Probably handle this trade something like this on the 12-hour. Or you could wait for the daily, but that's going to leave you waiting until next week. Most likely. Maybe tomorrow, but most likely next week. So there is still a potential here on AUDCHF. Just got to watch and see how this candle here plays out on the daily. Or if you want to take on a bit more risk, jump short on the 12-hour around about here. That's what I would do anyway. I would jump short on the 12-hour around about here. Right, EURCAD has broken through the support area. It's coming back up to test it. This could give us a nice short trade. If this comes back up, stalls here, definitely be looking for a short. That stall can happen anywhere. It could happen, when I say anywhere, I mean on any time frame. So, you know, you could even look at the 4-hour for price to push up to here and stall out at resistance and then continue down. So this is the kind of move I want to see here. I want to see price hit that resistance area, stall out. So actually, let me redraw this just so there's not any confusion. Nice strong bearish trend. Price breaks through support, comes back up, hits resistance, stalls on resistance a little bit. Sellers start picking up. It starts to dip down. Then you enter the trade and you carry down with that continuation of the trend. That would be the game plan for this one. Now it could stall on the 4-hour, the 6-hour, the 8-hour. I know a lot of people are confused when I say 4, 6, 8, 12 or daily, but the thing is, what you need to think about is the reason I say you can trade this on any time frame, it's because it's up to you to pick the time frame. Picking time frames is not some kind of magical ability. It's not something that takes skill. It's just up to you to define what level of risk you want to take. That's what picking a time frame is. It's not about picking the right time frame, looking at the price action. It's about you to decide what amount of risk am I willing to take on this trade. Because when you trade the 4-hour time frame, you are at high risk of getting in on a false breakout. So price could go here. We can get this beautiful indecision candle, kind of like a doji or a spinning top or whatever you call these things. Something like this. Something like that. Nice little candle. Then the next candle starts to move down and you're like, ooh, this makes sense to enter this trade. Fantastic. But on the 4-hour, you're at high risk of that being a false breakout, and then the next candle goes like this. Boom, stops you out. Maybe not the next candle, but the next few candles. More likely than not, what it would do would be from here, just keep moving sideways, and then eventually drift up. So the 4 hour is going to get you in earlier, but there's a high chance that you're going to get in, not a higher chance that you're going to get in on a false breakout, right? But then if you go to the 6 hour, you have a slightly smaller chance of getting a false breakout. If you go to the 8 hour, you have an even smaller chance. 12 hour, even smaller. Daily, even smaller. So the higher the time frame, the less chance of you getting in on a false breakout. But also the flip side of it is, the higher the time frame, more likely than not, the worse the entry price. So you're going to get in later, generally speaking, if you're trading from the daily, than you would if you're on the 4 hour. So 4 hour, higher chance of false breakout, but way better entry price, generally speaking. So way better entry price. And also, another benefit of the smaller time frames is sometimes moves happen quite quickly, and if you're waiting for the daily, you might miss out on it. So this could do this on the 4 hour, but on the daily, you would have completely missed your chance to enter. So picking time frames is not really about the price action. It's just about you deciding, am I willing to jump in on the 4 hour on most of my trades, but take way more losses, but overall get a better entry price and get more trades, because I'm not going to miss trades like I would on the daily. And figuring out if that's going to be more profitable overall, because number one, you're going to take more trades. Number two, you're going to get in at a better price. So you might end up making more profit overall trading the daily, but then can you handle the downsides of taking more losing trades? Because psychologically, a lot of people don't like that. They don't like losing. So, and I'm one of those people. I really don't like losing too many trades. I'd prefer to have a high win rate, even if I'm technically speaking making less money. And you could argue that that's stupid, but it's just, I start getting sad when I'm taking a lot of losses in a row. You know, a few weeks of losing, even like 6 weeks in a row of losing, probably won't faze me too much. But it's not. But what phases me is losing a lot of trades. Having a low win rate is what phases me. What I don't like is overall, over the course of a year, when I look at my win rate and it's something like 52%, 55%, psychologically, that for me, I just don't like that. It makes me doubt myself. So that's why I tend to go towards the daily time frame and the 12 hour. But in the end, it's really up to you how you want to handle that, guys. So this is why I say, EURCAD, looking for a short trade here, bouncing from resistance. I'm going to lean towards those higher time frames. If you're more willing to take on some risk, boom, jump in short on the 4 hour. More likely to get in a false breakout, but you're also more likely to catch a trade, and you're going to get a better entry price than I would. Make sense? Does everyone get that? I'm going to explain this concept in more depth in the course, because I realize that this is one of the videos that's missing from the Forex Mastermind, or the Price Action Mastery course, rather. I haven't really explained this subject in depth, and I'm going to explain it in a lot more depth and give you more examples in that. But you know, this is a brief explanation in the webinar, so I hope that makes sense, and I hope you guys get it. Sure, why not? You're welcome. You can sail the yacht for me. Save me the work. No, I'm kidding. I'm sure the sailing part's part of a lot of the fun. I think I've read everything. Yeah, cool. Right. So EURJPY, what's going on over there? Nothing much, guys. It's what we're waiting for here is we're waiting for price to hit the bottom of this range and then jump back up. It's not at the bottom of the range yet, so not going to do much here. DXY, it's just moving sideways at resistance, like everything else is moving sideways. USD in particular is just moving sideways. I just don't think USD traders are trading much this week because of NFP, but then also because of Independence Day. I just don't really see USD traders trading much this week. Euro AUD got a reversal here on the lower time frames, 8 hour. This is a good example. It's a bit below resistance, but this is a good example of what I was just talking about. If you waited for the daily here, it's very possible you would have missed this long trade. Now, this has broken below support, so it's actually not a great example. So, yeah, okay, this is not a great example. Let's ignore this one because this broke below support. I think on GBPAUD we'll have, yeah, see, GBPAUD is better. So Euro AUD broke below support. This one, it looks like it's probably headed up, but what I would do with this one would be I'd have my entry a bit higher. So I'd have my entry somewhere like here because I want to be sure it breaks through what could be former support and do this. It could be former support and it could have become resistance. So I want to make sure that price breaks through this possible resistance and gets through, like, not necessarily at the top of that blue line because that blue line means nothing, but I want it to get like higher through here. So what I would probably do with this one would be look at this candle size. Just the general rule of thumb I have for this. So this candle is about 61 pips. So what I want to do is I want to do above the high of this candle by about 30%, so 18 pips here. So roughly around there. It doesn't have to be perfect. We're doing roughly 30% above the high of that candle. So around about there. Stop loss below those lows. So I'd want to see it price move up to there before confirming the entry. Anything other than that's going to be too early an entry. Sure, you could enter down there, fine, but you're going to contend with this potential resistance area. So if you want to jump in long here, I recommend doing it like this. GBPAUD. Now this is a really good example of the concept I was just talking about. If you're like me and you wait for the daily to go long here, you might have missed out on this opportunity because price has turned around quite quickly. If price continues to go up to here, from here, that would have been a great bullish reversal trade, but waiting on the daily, you would have missed out on it. But on the 8 hour, boom, you have a perfect setup, which you're just long on, Michael. And what did you ask about it exactly? Oh shit, you said you were, oh man, sorry, I missed this part that you had to head out in a few minutes. My bad. I'll email it to you if you're gone. Your trade, if you're still here, Michael, your trade's fine. It's a good setup. Yeah, just hold on to it. It's definitely 100% a good setup. If you're gone, I'm sorry. I missed that you were heading out, so I'll just send you a quick email to explain that. So yeah. If anyone's in on this GBPAUD trade, it looks like a solid setup. Hold on to it. It looks like it's gonna keep heading up. It is counter trend, so do have a 1.5 hour target. The target that Michael has, he hasn't told me his entry or his stop loss, so I'm just gonna have a guess with those. Do something roughly like that, and then stick that target into here. Yeah, see, so he probably has a 1.5R target, which makes sense. You're trading counter trend, have that 1.5R. If it moves up quickly, then you can extend that target. GBP CAD, very similar thing going on here, but this one just doesn't look as good. Yeah, I'm not doing anything with that one. Nothing on these. Actually, my bad. Short trade here on CAD CHF for those who want to take it. 8 hour, 12 hour, daily. Not daily, 12 hour. 12 hour potential short here on CAD CHF. Could take it. I'm not going to. Like I said, I just don't think it's that safe to trade the next 2 days, personally. But yeah, potential short there, guys. Right. Let's see if we see any other setups. AUD New Zealand. No, I'm not doing anything there. Why did I have that there? What was the reason for that? Oh yeah, someone entered a short here. Who was it? Are you in today? Can't remember. Someone asked about a short yesterday. GBP/USD has hit support. It's a weird support area though. I'm not that confident in this support area, so I'm not going to do anything from there. I know I'm flicking through things fast, but I'm just looking for price to be on support or resistance. And if it's not on there, then I'm not doing anything with it. So that's why I'm flicking through things quickly. I didn't see anything else, guys, but we have a whole bunch of setups here. We got potentials, AUDCHF potential short, EURCAD. EURCAD, we're looking for a pullback to this resistance area for a short trade. So this could happen on any time frame. Just keep an eye on that. EURJPY, we're still just waiting for this for price to hit the bottom of this range. So that's just wait and see. DXY, price moving sideways on resistance. So potential short from resistance if you want to take it. EURAUD, I would probably enter around about here, which is roughly the 1.6108. GBPAUD, if you entered, you should have probably been in already. Just wait for this one to go up to that 1.5R target. GBP CAD, I'm gonna strike this one off. I don't think this is that good. And CAD CHF potential short about to trigger on the 8 hour, 12 hour, so on. Yeah, that's it for the analysis, guys. Thank you for attending. Do you have any questions? Actually, I forgot that part. It's an important part. GBP CAD's not looking that good because it's countering an extremely strong bearish trend. So we're countering an extremely strong bearish trend, and we didn't really see we didn't see price stalling at all, unless maybe you go down to like the 1 hour or the 4 hour. So I think that we might be seeing right now just an immediate move from buyers. Just an immediate push up, and then it's just going to start sinking back down. What I like to see is I like to see sellers actually stalling out at a support area. I want to see sellers losing steam, and I'm just not convinced that they're losing steam at the moment. I I think that price has come down to here, pulling back, and eventually it's just going to dip back down. Yeah, but they could definitely lose steam. They could, over the next day or two, this could turn into indecision. But right now, it just looks like price has hit support, boom, going to pull back up, have this immediate reaction that you usually get when you hit support, and then it's going to continue down, much like it did here, even though it did that a bit lower, but it did a very similar thing here. Hit support, boom, shot back up, and then continues down. That's what I'm seeing here. So I just don't like it purely from that aspect. And I'm really apprehensive to trade against these very, very strong trends. Like, this is a steep trend. All right, it did move sideways a bit there, but other than that, this is a steep trend. We're seeing a lot of momentum to the downside, and I'm apprehensive about trading against those, unless the setup is really strong, and I just don't see this setup being really strong right now. Like these trends here, Euro AUD, GBP AUD, they're just not as strong. The last two candles, without a doubt, these last two candles were strong, but I'm talking about the overall trend. This is just not as strong a trend overall. So I'm more willing to get in on this one than I am on GBP CAD. That GBP CAD trend is powerful and steep. And we're just seeing a lot of CAD strength. Like, look at USD CAD. USD CAD started tumbling down. We're seeing a lot of CAD strength. You could enter GBP CAD if you want to, though. Could enter that, but I'd much prefer, if I was trading these next 2 days, to jump in onto that GBP AUD one as opposed to GBP CAD. CAD's looking quite strong. AUD not as strong. I think this one has a much better chance. Do I trade gaps? No, not really. I mean, I don't not trade gaps. I just trade I just pretend that the gap's not there. I don't have a particular plan in place for trading gaps. I've tried in the past, but I just didn't really see it being that useful. Yeah. So when you say, I know the DAX has some crazy gaps. Wait, is it the DAX? Anyway, do you mean like spikes like this? Yeah, definitely. It's something I take into consideration, because if you get a spike like that before you're entering a trade, so it's going to be hard to find a good example of this though. Maybe it'll be hard. I don't know. Let's go down to the 4 hour here. Let's pretend that we had a spike here, like that. And stop hunting is not, stop hunting doesn't exist. That's just a myth. So yeah, you get a spike like that. That's really going to affect my decision making when I come into a trade, because I've already seen that when buyers react to this support area, that reaction can't last. That sellers are too strong and they push price back down. So I'm more apprehensive getting into a long trade from here, because I see that that buyers can't really do much here. But I guess the spike would have to be smaller. Let's say we have a spike like this. I'd be apprehensive about entering in a long trade here, because I see that the buyers just, whenever they start pushing back up, they're going to falter and fall back down. Stop hunting is a myth. It's one of the most absurd myths ever, that a bank cares about a retail trader's orders and hunts retail traders. Retail traders aren't even trading the Forex market. 90% of the time, your money never hits the Forex market if you're a retail trader. Even if you have a broker that's STP or what's it called? The other one, an ECN broker. All that means is they put your order straight through to the next level in the food chain, right? So if you're with an STP broker, that means they do not have their own books. They're not keeping your trades in-house. They're just pushing those trades straight to the liquidity provider. But that doesn't mean that the liquidity provider is not keeping those trades in-house. They might be. Liquidity providers have their own books. Sometimes the smaller STP brokers, what they mean by STP, straight through processing, is they will put your order straight through to another broker in the food chain. So you might have oh, oops, I just had a phone call. Sorry, I had to cancel that. So you might have, let's say, FX. No, let's do this differently. This is the Forex market, or interbank. Interbank. Below interbank, you have a lot of liquidity providers. So we'll just call those LP. Below liquidity providers, you have the big boy Forex brokers. FXCM, and all the big boys. Forex.com. Just going to do BB for big boys. Below them, you have the smaller brokers, and then below those, you have the smaller brokers and so on. And this is kind of like a chain. So when you take an order and you're with a small broker, even if your broker is an ECN, right? Or a STP broker, small brokers, SB. VB is big brokers, LP is liquidity providers. Even if you're with a small STP broker, all they mean by STP, straight through processing, is they'll throw that order up to FXCM. Now, FXCM has your order on their books. FXCM, they might push it up to the liquidity provider. Liquidity provider might push it up to the Forex market. But in most scenarios, your order never hits the Forex market. Your order is stuck somewhere in this chain, either with one of the big brokers or one of the big liquidity providers. By the time you exit that trade, unless it's a trade that's been open for quite some time, it's never actually hit the Forex market. And if it does hit the Forex market, that order is grouped, because the minimum order size in Forex is so high that your $1,000 position, even if it's a $5,000 position, or pound or whatever, your position is grouped with so many different orders from retail traders, even from from managed funds, from hedge funds, your order gets grouped into a huge order and gets pushed through to the Forex market. So the banks aren't like, oh, that's a retail trade order, because they can't tell. All they're seeing is massive, massive orders. And on top of that, banks don't know where your stop loss is, because your stop loss never gets pushed through to the Forex market. Stop losses don't get pushed through to the market. That's crazy. Stop losses sit with your broker. Stop losses are here until they're triggered. A stop loss is a market order. So there's no way a bank up here could be like, oh, there's a bunch of retail traders with stop losses sitting somewhere on Euro USD, because your stop order is sitting with your broker. It's a market order that has yet to trigger. The market order is triggered once that level is hit. Stop hunting is the most absurd conspiracy theory lie, and when you understand just the structure of the Forex market, stop hunting makes zero sense. That being said, banks do manipulate price in order to get better fills. That does happen. But they're not after retail trade orders. Because first of all, they can't see retail trade stop losses. Second of all, retail traders are almost never actually in the Forex market. They're somewhere on some broker or some liquidity provider's books. Those orders are grouped somewhere on the books. And the books mean like the internal Forex market that the broker has, or that the liquidity provider has. I hope that makes sense. My structure of the Forex market that I drew out might not be perfect, but that's generally, without getting into a super in-depth explanation, that's generally how it works. If the chart looks blurred, it's probably because your internet connection's not great and you can't download it fast enough. I'm going to be doing a podcast, guys, on stop hunting, because I really want people to understand how much of a myth it is and how little it actually makes sense. And I think retail traders need to understand that they're not really trading. Their orders are almost never really going through to the Forex market. This doesn't affect you in any way, in the sense that it's not going to affect your trades in any way. It just means that your order is too small to actually be put through to interbank, unless it gets grouped together with thousands of other retail trade orders, or gets grouped together with orders from hedge funds, etc. So you're saying your broker is manipulating price? So the banks aren't stop hunting you, your broker's stop hunting you? That's a completely different type of stop hunting. Your broker could in fact stop hunt you, but if they're a regulated broker, they would be caught doing that. They would be heavily fined, and they could even possibly be shut down. If you're with a broker that's regulated by the FCA, by ASIC, by, in the US, the NFA, or the CFTC, whatever the ones are in Switzerland or in Sweden, if they're regulated by a proper regulatory body, they're not stop hunting you, because every year they get a review of their orders. And if they get caught even doing anything close to stop hunting, they will be heavily fined. And if they've done it enough, they could even be shut down. And a lot of people say, well, the regulators could be in on it, but that makes no sense because you look at what the regulators are doing to the industry. They're implementing crazy leverage rules that are, well, I honestly don't think they're crazy, but a lot of people think those leverage rules are crazy. I think those leverage rules are more than enough to trade with and fair, but a lot of people think these rules are crazy. And while I don't 100% agree with people calling them crazy, I do think that the concept of them forcing low leverage and not giving people the freedom to choose is crazy. But my overall point is, if the regulators are forcing small leverage to prevent people from losing too much money with their broker, then why would they be in on a whole stop hunt conspiracy with the brokers? It makes no sense. The regulatory bodies are usually government, depending on the country, they're usually government agencies. And their main objective is to protect the consumer. Your broker, if your broker is London based and they're regulated by the FCA, they're not stop hunting you. Stop hunting is a myth. It's a myth perpetuated by Forex educators who are trying to sell you a course where they tell you, oh, I can tell you how to beat the stop hunters. The best way to sell something to someone is to scare them, implement fear, and then you act as a solution to that fear. This is how deodorant companies sell deodorant to people. This is how it's just they make you scared. Not scared is a strong word, but they give some fear, and then they'll say, I'm the solution to that fear. So brokers are evil, they stop hunt you. Banks are evil, they stop hunt you, but not with my course. That's what they do. Why are bid and offer prices different? It totally depends on the liquidity provider. Most brokers are just getting a feed from liquidity providers. Some brokers have an aggregate of liquidity provider feeds. And then if the liquidity providers are upping spread for whatever reason, it could be low liquidity, it could be during news, for example, periods of high volatility, spreads are widened, and if a broker has a different liquidity provider, so you could have like FXEM having different liquidity providers to Forex.com. Some liquidity providers might not have widened spreads. Some brokers keep their spreads artificially low because they know that even though they might lose out a little bit, so that they might their liquidity provider might be charging higher spread, they might lose out. The broker might lose some money when they keep their spreads low. But overall, they've calculated that it's worth keeping their spreads low because it keeps customers with them. So it makes sense for them to take a hit sometimes because customers are more likely to stay with a broker that has consistently low spreads. There could be a lot of reasons why some widen and the others don't. But it's the reason is not stop hunting. Stop hunting is a myth. It's just people trying to sell you shit. Ooh, I shouldn't have said that word. I'm sorry. I don't like swearing on webinars and analysis sessions. But it is. That's what it is. It's people trying to sell you shit. And it annoys me because this industry, I don't think there's anything wrong with selling a Forex product. Of course, I sell a Forex product. But it's the approach you take to selling something. If you're honest about it, if you tell people realistically what they can expect in terms of returns in Forex, realistically explain to them how the market works, what they're in for, You tell them that it's going to be a difficult road, that it takes time, or you could just say, oh, buy my course and overnight you're going to be a successful trader. Buy my EA, you're going to make money while you sleep. Buy my course, I'll teach you how to beat the banks. That's the lying, dishonest way to do it. And sure, I'm not going to sell as many courses as those dishonest liars, but hey, at least I can live with myself. Because I know that what I'm doing is not, not bullshitting people in the end. Anyway, I'm ranting, guys. I just hate hearing this stop hunting myth because when I first moved into this industry, like I started trading and then I realized that as a trader, you're much better off if you have multiple streams of income. So I started selling a course, sharing my course, sharing my knowledge. And back then, this was around 2007, like there people who were sharing Forex education online were honest people. And at some point, internet marketers came in and they just started destroying the reputation of this industry with all their gimmicks and scams and tricks. And it basically turned what I do into this kind of dirty thing where I sell a course. Now I'm a dishonest person. I get looked down upon by other traders because I sell a course. But back in 2007, there was nothing wrong with that. But these days, it's just because so many dishonest people have moved into this industry, and it just kind of sucks. I really hate it. But for the two people who are still left here, I don't know if anyone else is still listening. Thank you guys for attending. I'm gonna wrap this one up. Oh yeah, that drop shipping thing is becoming big right now, isn't it? I see it on my YouTube all the time. So like I'll open up a YouTube video and there'll be this guy, hey guys, if you want to make $1,000 by the end of this week, listen to me. And sometimes I listen, not because I want to make the 1,000, just because I want to see what the hell is this bullshit about. So I'll listen, and inevitably, it becomes a thing about dropshipping. Buy something, sell it on Amazon, blah, blah, blah. Yeah, I'm sure there's money to be made in dropship. Actually, one of the, I think, I could be wrong. Actually, I don't want to say his name because I don't want to, like, I don't know if he'd be cool with me saying it. But what I can say is one of the students in the course, on the forum, he has a business that he's been doing for years that's essentially dropshipping. He sells lighting, I think like chandeliers and lamps and stuff. And he sells it in the UK or Australia. Bit hazy on the details. But essentially all he does is he'll sell it and then he'll order it from China. It'll arrive and he'll ship it direct from China to the person who's bought it in Australia and just make a killing on the profit. That's one of his businesses. Again, I'm a bit hazy on the details. It's not perfect. But yeah, drop shipping is something that certainly works. But yeah, drop shipping has become one of those things that's like, yeah, kind of like Forex became in around about 2010, where everyone started doing a course. I like that the Forex industry is being cleaned up lately. This is why I'm not totally against regulations. Those regulations are going to hurt a lot of the the scammy brokers, but also it's going to drive people to scammy offshore brokers. I actually did a podcast about this yesterday. It's going to be one of the first podcasts that gets released. It was a really good podcast. I talked to a guy who's an expert on Forex brokers. I'll be editing that podcast and releasing it. But anyway, guys, look, yeah, it's going to be part of the blog. It's going to be part of, yeah, I'm not 100% sure how it's going to be released yet. It's going to be on YouTube for sure, but also it's going to be on podcast channels. I'll probably post it to the blog. It'll be everywhere, really. You won't miss it, trust me. I'll email enough about it. But he just gave very good insight into regulations and how the brokers work and where he thinks the Forex market's going to end up being several years from now. It was a very interesting conversation. But anyway, guys, I'm going to wrap this one up. Sorry, but wrapping this one up. It was very nice chatting to you people. You guys are the best. Ush. Is stop hunting real? I already answered that, so maybe your slow internet, you didn't see that. But just go back to the recording, and I get way too in-depth into is stop hunting real. So yeah, thank you guys for attending, and I'll catch you guys. I'll catch you guys later.